Welcome everyone to Vested Interest. This is Shane back again for the Stock Pick of the Day video. Today we're going to take a look at one out of the utility sector, Black Hills Corporation. It is December 14th. Let's jump right in. If you want to know more about this company, check them out at ir.blackhillscorp.com. That is ir period BlackHillscorp.com. That is their homepage where I pulled this information from. Black Hills Corp, ticker BKH, is a customer-focused, growth-oriented utility company with a tradition of improving life with energy and vision to be the energy partner of choice. Based in Rapid City, South Dakota, we serve 1.3 million natural gas and electric utility customers in 8 states: Arkansas, Colorado, Iowa, Kansas, Montana, Nebraska, South Dakota, and Wyoming. And you can see here below in the map, right, orange is electrical utilities, natural gas is in blue. This shaded area here looks like orange and blue with the cross hatches right there is electric and natural gas utilities, and the star their headquarters, right? And they are like your typical utility company, right? If you have natural gas into your house or apartment or condo, whatever you live in, that they're a utility company that provides that for these particular states. If you have electrical utilities, right, you want to flip your light switch on and your lights come on, whoever your provider is would be the same provider for these states. And if you're in one of these states, maybe Black Hills is your provider. Now, the reason we were taking a look at them, down 0.54% on the day. We are talking about Black Hills Corporation, ticker BKH, closed out the day at $55.71. 52-week range as low as $46.43, as high as $73.98. So they are a little closer to their 52-week low than their 52-week high, kind of bouncing in between the two. Maybe, like I said, a little tick closer to the 52-week low. They have an average volume of 557,000. Today's was 408,000. You can see pretty much a sell-off throughout the day. Market cap of 3.788 billion. A beta of 0.64, so they are less volatile than the overall market. Price to earnings ratio on this one is $14.47 per share. EPS, earnings per share, sitting at $3.85 per share. Their next earnings date is going to be February 5th through February 9th. So if you're interested in that, mark your calendars. Forward dividend is $2.50 paid out on the year. They are quarterly payer. We'll see that here in a little bit. Very nice starting dividend yield on this one, 4.46%. Ex-dividend date was November 16th. Looks like they paid out on December 1st. So if you were to buy them now, you would be in line for the next dividend payout. And a one-year target estimate, at least according to Yahoo Finance, of $58.17. So they're right up against where they see them maxing out over the next year. Now I'm going to get into statistics. To do that, you'd go into Yahoo Finance, you'd click on statistics, you'd go down to dividends and splits, you'd look at their 5-year dividend yield. We're looking at dividend yield theory here. 5-year dividend yield is 3.39%. Current dividend yield 4.46, or over here where it says forward, same number, 4.46. And since it is higher, that speaks to some undervaluation, at least according to dividend yield theory. Now they also have, for a utility company, this is actually a really low payout ratio. Usually utility companies are in the 80-90% range, and they are capital intensive, I will say. So this is not odd. I like 75% or better as a rule, but like I said, for a utility company, this is actually pretty low, 64.94%. Now, if you're going to be investing in any individual companies, you want to understand the financials of that company. You want to get in here, click on financials, look at their balance sheet, their income statement, their debt to equity ratios, their earnings. Is earnings growing over time? What do their revenue look like? Is that growing over time? Are they paying down their debt? What do their assets over liabilities look like? Are they issuing debt? Are they issuing shares? Are they buying back shares? We want to look at free cash flow because typically, as a dividend growth investor and companies that we're invested in, if they have growing free cash flow, they pay out growing dividends along with that growing free cash flow. So for this exercise, we went back to 2019. Their free cash flow is in the negative, and you're going to see everything in the negative except whenever we get to date here in 2023. It looks like they might be in the positive this year, and this is not uncommon. Negative 312,000, negative 225,000, negative 742,000 in 2022, negative 19. So not uncommon for these type of companies. They are very capital intensive. They're constantly reinvesting their cash back into the business, right? If electrical lines go down or lines were to burst, they had any issues with their utility lines at all, they're going to be paying to fix them. Plus, they're paying as new houses are built and customers expand. They have to pay to expand that service into those areas. Like for example, if a development comes up and they've got several hundred homes, they would have to expand it into those homes. So they are constantly upkeeping their utilities. Excuse me. So this is not uncommon. If you were to compare them to other utility companies, you're going to see the same thing. So don't freak out whenever you see negative cash flow, negative cash flow, negative cash flow. It does look bad. And for a typical company, not a utility company, it would be bad. Now, I always recommend more than one source. So another one that I like is stockanalysis.com. You pick any sources that you like. I like Yahoo Finance and stockanalysis.com. Some people have other choices out there that they might like better. That's perfectly all right. Now, according to the 6 stock analysts they have on this one, they call it a consensus hold. They have a low estimate of $49. That would be a 12.04% decrease from where it currently sits. And that's probably $49 or lower is where I'd look to get into this one. Under 50 really probably is a good buy-in point on this one. I have not done a discounted cash flow analysis on this one, but that seems to be a good, if you look back at their history over the last several years, seems to be a pretty good buy-in point. Average $59.83. That would be a 7.4% increase from where it currently sits. And if it happened to hit their high of $67, that would be a 20.27%. All the while, you collect that 4% plus dividend yield. I like to get into statistics here as well and look at return on equity and return on invested capital. I like 10% or better typically, but again, for this type of company, utility company, their return on equity is typically lower. And this one is actually pretty good at 8.2%. Now, it is under the 10% that I typically look for, but again, if I compare them to companies in this utility sector, that is very nice. Same with return on invested capital sitting at 5.24%. I think I was looking at Pinnacle West earlier. They were down in like the 6 and 3%. So again, if you compare them to other companies in the same particular sector, these are actually very good numbers. I also like to look at EPS, earnings per share growth. Forecasted over the next 5 years at 3.26%. I like 5% or better, so this is a little lower than what I'm looking for typically, but same thing. You'd want to compare this to a utility company. Utility companies, I look at utility companies similar to the way I'd look at a bond. Not a ton of growth, but pretty safe unless everyone out there in that area decides to stop paying their utility bills. This company is not going anywhere. We're going to be continuing to use natural gas and electricity long into the future. So again, this company is going to do nothing but grow over time as populations grow. Now, lastly, we'll look at the dividend. We want growing dividend over time, 3.7. So not only does it start a very nice 4+% dividend yield, it has pretty decent growth, low single digits at 3.73%, and I can deal with that low growth with such a high starting dividend yield. Again, 64.77% payout, so very low. Quarterly payer, they pay out on the March, June, September, December timeframe. And going back to 2020, you can see here, August 17th, 2020, 53 cents. November 2020, they jumped it up to 56 cents. November 2021, up to 59 cents. November 2022, up to 62 cents. And I am surprised that they did not raise it here November of 2023. So I would anticipate that they would be, if they want to maintain this dividend growth, right? That's 1, 2, 3, 4. They're in their 5th quarter, and they raised it in 2022. So doesn't look like they're going to raise it in 2023. Looks like they might be pausing. So you might want to do some research there and make sure that they are going to continue dividend growth, or if maybe they're doing enough reinvestments where they're pausing it. But I would anticipate if they are going to continue their dividend growth, they are going to do it in the 1st quarter of 2024. This is the vested interest stock screener. This is how I look at a company on a high level. It's also how I set up the videos. So as we're walking through the videos, this is pretty much what I'm looking at. Not pretty much, this is exactly what I'm looking at, right? Understand the business, growing free cash flow over the last 5 years, growing dividend payout ratio of 75% or less, check valuation based on dividend yield theory, buy below or current cost basis or within 15% of the 52-week low. So that's where I look at maybe getting into a starter position, 15% of the 52-week low. If it's in my portfolio already, I'm looking to buy it under my cost basis. Return on equity and return on invested capital, 10% or better. and earnings per share growth of 5% or better. And a kicker, if it is a financial company like a bank, I throw in price to book. You can use price to book for any company, but if it's not a financial company, don't use the percent rule or higher or lower. That's really for banks, right? 1 being fair value, anything under 1 being undervalued, anything over 1 being overvalued for banks. For other companies, make sure you're comparing them to companies in the same sector. Well, that is it. Let me know what you think of Black Hills Corporation. Is it in your portfolio? Do you have other utility companies that you like better? This is one that's on my watch list. Like I said, I think under $50 is really where I'm looking to enter this one. So it needs a bit more of a pullback. And as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, hit that subscribe button. Help me grow this channel. Join the vested interest community. Join us on this journey to financial freedom. And hit that notification bell so you're notified whenever we put out any new content. Drop a comment. Let me know what you think of Black Hills Corporation. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like Black Hills Corporation you'd like me to add to the Stock Pick of the Day series and do a video on, drop it in the comments below. I'll work it into the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by, and we'll see you Sunday. Portfolio update, 7:30 in the morning. Tune back in for that one. We'll see you then. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk of gaining money. Should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.